My goodness, I cannot remember the last time that I was so upset with myself on a green day. This was just an absolute lack of discipline. I broke so many rules today, and I got bailed out by the market. I made so many mistakes. All of my trades were sloppy. As you can see, my oh yeah, by the way, welcome to recap for day number 18. My name is Alex or whatever. But as you can see, my ROE is in the green today. It's above average, and I'm finishing up with a $45 win. And despite that, I think this is probably the ugliest day in the account so far. And right now, I'm feeling really happy that it's Friday and that I have a couple of days to calm down and look over this week and really try to, fix a lot of the problems. Because I said last night in the recap, when I was making the recap last night, I said, I'm only going to allow myself to trade pre-market. You guys heard that, right? Well, that's rule number one broken today. And then again, I did something weird. I carried shares into the open in a spot where I wasn't up already, and that it wasn't clear that I was going to, profit from some sort of opening squeeze. That was something else, a rule, more or less a rule that I broke. Certainly a disciplinary failure. And then I took two more scalps, and both of them were just horribly executed. I left a home run on the table today. And I just got back to my place after having breakfast. I noticed that XNet had squeezed all the way up to $4, and I was initially in this thing at $2.79, which just pisses me off so much more. Not to be too results oriented or anything, but no matter which way you slice it, I did a horrible job today, and I am super grateful to that the market bailed me out. But at the same time, I almost wish that it didn't. I feel like I wish I had closed this day with maybe a $20 or $30 winner or loser. Not something super dramatic, like I didn't want to have another $80 loser or anything, but I feel like it would be better for me in the long run if this day did not boost my trade accuracy and it did not show green on my daily results, because even though I do have this recap to look back on and remember how mad I was about it, I think that this kind of gives data that is misleading, and I don't really like that. So this is normally the part where I'd say, all right, this was my setup, this was my plan, blah, blah, blah. And I have nothing to say here, to be honest. Like, I just got in this expecting that the news and the the daily chart would just produce a move out of nowhere for no particular reason. I was, a little enthusiastic about this candle at 9:15 on the 5-minute chart. But if you look at the 1 minute, I mean, where's the volume here? Where's the confirmation volume? There is none. These are, 5,000, maximum 5,000 bars on the 1 minute. And my entry was on this candle here, and I took 500 shares, which this will turn out later to be probably the only thing I like about this day. I'll get to that later. But long story short on this trade was that in between my entry, just after I got in, I finally had it confirmed that the news on ACRS was recycled. They had released exactly the same news headline, almost like word for word, on September 16th, I believe it was. And here they were recycling it on October 25th. And that to me confirmed, like, oh, okay, now I understand why there's no volume coming in here. And despite knowing that going into the bell, I didn't take the opportunity to get out in the green zone at 9:30 on this first 1 minute candle. We pop up to 194. I could have got, or 195. I could have got out at 194, 193, 192, all kinds of green bailouts that I could have taken, and I did not. And shortly after that, it retraced all the way back down to my stop, and I thankfully didn't jump the gun on the stop. It did come back up here, bounce back down again, and then on the third push up, that's when I said, okay, I'm just going to take what I can. Initially, I had an order out there to sell the whole thing at 194. But after we hit a high of 193 here, I decided to reset that to 192, and I left the order out there. And as you can see, I ended up leaving even more on the table here. This is the time where finally there was a volume pattern that was good, and I didn't take advantage of it. I could have got a fill easily at 196 here and, booked $30 on a terrible trade. And instead, I only booked 10, which after commissions turned out to be just a $5 winner, 1 penny per share. And the reason that I got such a terrible exit, even though it was profitable and my whole goal on ACRS was to just cancel my plan on the trade, which my plan sucked. But in any case, once I realized the news was no good, I decided, okay, let's just get out at the best price we can. And the reason I messed that up, as you can see on my trades window, was that I entered a second trade, which is another discipline failure on the day. I mean, coming off of yesterday with that experiment where I tried to test my limits and see how well I could manage multiple trades, I mean, I failed that miserably. And granted, there were a lot of other factors yesterday that were not present today. Today, my internet was working fine. I got plenty of sleep last night. I ate well in the morning, all this. But nevertheless, I mean, I was still in the middle of breaking the rule that I had set for myself that I wasn't going to trade during regular market hours. And not only did I do that, but I entered another trade. And this is the one that I decided to take. I was initially looking for a break of this candle here at 932 on substantial volume. The following candle did break the high, but I didn't like the attitude of the tape during that time, so I decided to wait one more. And what I was looking for was something that could develop into a long body candle. And I found it here, and I did get in at a pretty good price. I did predict the action there a few seconds in advance, and I got a fill for 500 shares at 279. And we pop up to 288, which, you know, this was intended to be a small scalp the whole time. I was only thinking of a profit target of about $3, which is where the resistance, my lines are deleted now, but the resistance on here that I was looking at was right here. And so it was only supposed to be a few cent scalp to begin with. And my risk area was 370, which was kind of significant reaction point from pre-market. And, you know, so I was risking about 9 cents or 10 cents on this. And it pulled back a couple of times, bounced off the VWAP, and I just didn't like the attitude of it. I saw a bunch of choppiness throughout this area, and instead of being patient and smart about it and looking back at the chart, I let myself become hyper-focused on the level 2. And because this was such a high float with a 33 million share float, it wasn't reacting the way that I'm normally used to, you know, reading. And so my reads were thrown off. And I was overreacting to the movement on the level 2. And as a result, I got spooked. And once again, the correct volume pattern started developing. And I got out right here. I sold half at 284 as insurance against a break back down. I was feeling a little bit overexposed on this one. And I decided to hold the rest as far high up as I can go, you know, quote unquote. And then meanwhile, this, you know, really significant volume pattern is developing. And the reason I exited the rest here at 289 was because I thought this volume should have produced a better move. And, you know, meanwhile, this was setting up altogether once again. It broke through that area at 288, made a high of 297 just below that resistance level that I was looking at, and then formed an ABCD pattern that was really nice. And this is when I justified taking another trade. And the reason was actually pretty sound. This was the only legitimate setup of the whole day. And looking back, I don't mind taking the setup at all. I think I should have pounced on this, and I did. And once again, I went with 500 shares because I wasn't intending this to be, a really big move. I wasn't expecting a really big move. And why would I? There was no news on this stock. It was a 33 million share float. And there were some overhead resistance levels, a couple of them anyway, one at 360 and then the other one at $3. And instead of only waiting for the break of the previous high, which was 297, I decided to give it another 3 cents. Let's just wait for the break of the whole dollar and, wait for some substantial confirmation. And so that's what I did. And on the very next candle, that was my entry at exactly $3. I got in, my timing, that's one positive thing. My timing was mint. It was right on the money. I think there were about 50,000 shares on the ask at $3, and I might have jumped in on like the last 2,000 of them. So even though normally I would prefer to wait for the actual break, just in case there's a hidden seller behind the order that I can see, I do like the timing that I had on this, and I was never really red on this trade, which is the one positive thing I can take out of it. However, if we fast forward, we can see that I stopped out like two candles later. And once again, the volume pattern is amazing. And, the volume was clearly ramping up. And if we look down on the 5-minute chart, we can see some serious momentum developing. I mean, granted, there were some pullbacks that were substantial, but the volume was clear. It should have been obvious that a lot of traders were jumping in and bandwagoning on this stock, and yet I didn't see that. Once again, I was too zoned in on the short term, too zoned in on the short time frame. And as soon as I saw a very large ask order pop up at 304, I believe it was, I decided to hit the bid immediately. There was 303 and 304, both had very substantial orders on the level 2. And once I saw 303 starting to wash out, I said nope, and I control Z'd my way out of that trade, as you can see on my trades window here, very shortly into this candle. And the thing that really annoys me about this trade is that, I had moved my stop up to $3 almost as soon as I entered. I decided I'm not risking more than that. And the thing that annoyed me was that it ended up reacting to the previous resistance. The previous resistance became support. And that has got to be like one of the most reliable signs of an upcoming surge. And on the very next candle, I would have met my target. My target initially had only been 310, 315. And, to be honest, I probably would have got out at 312 or 313 if I had waited for the next candle. And I honestly would have been happy with that. If I had been able to at least get a 10-cent scalp on a very low risk entry, I would have been happy with that. And we can fast forward and see that it would have ripped up pretty nicely. It kept making higher lows. And even if I had stopped out around here for the breakdown below 320, I still would have preferred this play compared to just reacting way too fast to this 1 minute pullback that didn't even close red either. So as soon as I closed this trade at 303 on XNet, I said, okay, that's it. It was already supposed to be that's it after the last one where I exited at 289. I was already planning on bailing out on the day and calling it a wrap. And I broke that rule to get involved in a legitimate setup, which I don't regret. But once I closed this one in a bad trade again, where I only captured 3 cents gross, which was only 2 cents net, I felt horrible, and I was like, no, there's no more excuses, there's no more reasoning, this week is done, this day is done, everything's done, you suck, you traded horribly today. And, I was really coming down hard on myself, and I think I was justified in doing so. But the really important takeaway here is that because I took sloppy entries and because I took bad trades early in the day, I hurt my confidence. And hurting my confidence had the effect of turning me off of the day. I locked up my level 2 and I kicked myself out of this day and closed my broker and went to breakfast because I had traded so badly. And if I had not done that, if I had been more patient, and if my first trade had been this one up here, where it was a legitimate setup, and even if it had gone red, I would have been able to excuse myself. In an alternate kind of history, sort of a butterfly effect viewpoint on this situation, is that if this had been my first trade, this highlighted one up here, if none of this down here happened, then I would have set myself up to take advantage of the pattern that had developed here on the 5-minute chart. There was a substantial pullback coming off of 334, bottoming out at 313. And if we look up at the 1-minute chart, there's a base that formed at 313. That would have captured my attention for sure. And what I would have seen if I had paid attention more on the longer time frames and had been more focused and disciplined, I would have seen a great pattern develop that resolved beautifully, as we can see here. We squeezed out of this consolidation period amazingly. And if I had been risking off of 313, I think, knowing myself, I probably would have been looking for an anticipatory entry of probably 250 shares this time above 323. And then as we broke the high of day at 334, perhaps I would have added more. And I have to say, I'm not 100% convinced that I would have not exited below 350. There was a little bit of daily resistance here at 365. I'm not sure if I would have really considered that resistance because these are very low volume days. But there's basically no question that I would have been able to squeeze a winner out of this pattern. A bullish pattern that I really like is the first 5-minute candle to make a new high following a substantial volume-induced push. And we have the high volume push coming up here. We have a pullback where there's no 5-minute candle to make a new high. And then coming out of this doji, which is, making a higher low than the previous one, then we got that squeeze on this candle. And this was a really high volume candle. And it just continued. It kept going up. And I can't say, I'm not going to speculate on whether I would have added into this move or whether I would have been selling into this move. I believe there's a higher likelihood I would have sold into this move and I would have never top tick at 406, I think. I think chances are my last exit would have been in maybe the 370s. Depending on what the 1-minute chart looks like, I actually don't know. Okay, maybe, actually, to be honest, I may have very well, top ticked this, or maybe my last exit would have been in the 380s, perhaps. If I had held a flyer, I think my last exit would have been somewhere on this candle, towards the first part of this candle. But no matter the case, no matter how I would have played it, it's absolutely crystal clear to me that my actions earlier in the day made me shoot myself in the foot. And even though, taking this trade and getting involved in XNet would have been me stepping outside my comfort zone, and it most certainly would have broken my thoughts last night about not wanting to get involved during regular market hours, I did wake up feeling pretty good today, and I ended up breaking that rule on terrible trades. There were like no setups whatsoever, and I ended up getting involved with fairly heavy size. These are 500 share entries on, they're lower price stocks, but as you've seen in the past days, I have not been taking these kinds of entries for my first. I've typically been scaling in. And as I mentioned earlier, I think the 500 share entries is pretty much the one thing that I did right today. I reviewed a lot of my data and my recaps last night, and I decided that if I'm going to have a scalp mentality, my share size needs to be bigger. I can't be overpaying on commissions on these, 10, 15 cent scalps, because a lot of my risk reward ratios are not good to begin with. And if I'm going to enter trades where my ratios are bad and I'm overpaying for commissions, the results are going to catch up to me, and I'm going to end up going red on these patterns. And so I decided that the adjustment that I should make is to take a higher share size of entry and just not add into the move. Instead of going 250 on the entry, I'll just take 500 and make sure that my entry is more precise. And even though my entries were, definitely questionable today on at least these first two, I do like the fact that I did make this adjustment. And I feel like this adjustment also, it puts pressure on me in a good way. It puts pressure on focusing on taking more higher potential setups. And like I said, let's ignore the fact that I failed the higher potential setups, with this being the only exception. I really do like that, and I think I'm going to really continue that going forward. I have boosted my equity here a little bit up to the, I guess I'll open on Monday around 2460-ish. And I think that's high enough that at least on certain stocks, definitely on stocks above $3, I can start to justify, at least on the stronger patterns, I can start to justify higher share size and higher dollar risk. I think I should be moving my dollar risk up to maybe $75 to $125 per trade and looking for multi-$100 winners on winning trades. And I think that's better. I think I'm more comfortable with that now. I got past the squeaky kind of quick scalps that I was looking for coming out of that snowball day. If I open my daily results for a moment here. Coming off of this day, I really just wanted to book green and get a nice little run of green days in a row. And even though it didn't happen cleanly, I did clearly get that. I, recouped a lot of the losses that I'd suffered on this day. And I think I've kind of repaired the damage emotionally that I did to myself on this day. And so, going forward with now a more comfortable balance than I had coming off of the big loss, I do have a nice little cushion on this account now, and I feel like I should be able to really push the edge. And even though I am still kind of waiting for momentum to really show up, and I'm looking for that one parabolic mover that triggers market-wide momentum, even though I'm still tentatively waiting for that moment, I think that I can justify taking bigger share size on my scalps, and I think that it is absolutely the right thing to do. If we look at my trade log, which has been updated now, my average commissions are still more than 100% higher than they need to be. The minimum commissions, the way I calculate this, is 1 penny per share. And so I think I need to work towards getting that number down. And even though commissions should be a back of mind thing, I should not be worrying about commissions primarily. I think setups and setup quality and execution definitely should come before the impact of commissions. I'm at a point where I can really push into trying to get the commissions down. And, my accuracy is 60%. That's not ideal. I feel like that should be a lot higher and that I've taken unnecessary losses. But if I am going to take this scalp mentality, I think really, pushing share size up is really what I need to focus on right now. So like I said in the beginning, this day is one that really disappoints me. I'm going to look back and not be happy with this forever. But, you can't really sweat the past too much. I'm really grateful to be able to pull even a $46 winner out of this. And looking at the slightly bigger picture of this week, I mean, I do have 4 green days, and my red day is actually something that I'm pretty happy about as well. I like the fact that I cut myself off. I like the fact that I reacted well to noticing the signals, like the signals that I was about to make a big mistake. I reacted to that, and as was later proven in my experiment with the multi trades and the weird setups and all that, I feel like I proved that my brain was not into it yesterday, and that cutting myself off was the right decision. Just like cutting myself off today was more or less the right decision. It sucks that I missed a great setup, but given the trades that I had taken, I think those trades proved that I was not making good decisions. Even if the setup was present, who knows? Maybe I would have flubbed it and completely made a disaster out of it. And so I think I made good decisions overall. I like the way I bounced back from the last Friday, or last Thursday rather. And I'm going to show something real quick here as I close this out. That even, you've heard me over and over in this account so far say, yeah, could have done this, and this better. And, I made a lot of mistakes today. Some of my biggest winners, I've been like, what a bummer today. And look at this $170 winner, 7% growth. And I wasn't really happy with myself, 100% days where I'm just not happy with myself. And that's really a clear pattern, I think, in this account so far. And despite making all these mistakes, as I've mentioned previously, I'm still up significantly in this account. And what I want to show right now is a compound interest calculator. Like I mentioned yesterday, we're now just over a month into this account. And even if we take away account fees for next month from this balance, I will still be up well over 20%. And so 20% is the number that I'm going to use in this compound interest calculator. I've already plugged it in. And even though this is an annual growth rate calculator, I'm using it right now as if it's monthly. And so on a balance of just 2,000, which is below my current equity, and on a interest rate of 20%, which is once again below my actual performance right now, I'm still projected to end the year with over $17,800. And if you continue doing that over the years, I mean, 17,000 if I plug it in here, if I do this for one more year and then calculate it again, well, all of a sudden I have 160,000 after that, and that's coming from a balance of 2,000. And so I do like this pattern of not being satisfied with my results and still projecting pretty good future. The one hesitation that I'm really focused on right now is that these results are largely based on a lot of profit that came from a hot market. And in the past, I've really broken myself in the not hot market. When things are dead, that's when the impact of commissions and the impact of fees really swamps me. So going forward, I'm kind of not hoping for momentum because I want to see myself succeed in a dead market. And so, going forward on Monday, I've got an internet guy coming pretty soon today, in the next, any minute now, to be honest. And I'm really excited to have better internet because as you've seen in these recaps, internet has caused me quite a few problems starting on day one. And yesterday too, it seems like every day there's something caused by internet that really hurts me. So even though the upgrade I'm getting is not really that great, I'm still going to be operating at about 10% of the maximum internet speed that I can have in this area. And I'm definitely going to be overpaying for it. Even though it's not ideal, it is a huge improvement over what I'm using now. It's going to be several hundred times faster than what I'm using now. So look forward for videos coming a lot more frequent. That's something I'm looking forward to. I'm going to be uploading a bunch this weekend. And after that, these recaps are going to be coming out daily. So I'm really happy about that. And I will talk to you next time, hopefully with a lot of new videos to give you.